Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, April 9th, 2012 is sponsored by Realtik. All right, let's get right into it, folks. The markets are sharply lower today, but well off their lows of the day. We saw a solid gap down on the back of Friday's non-farm payrolls number that disappointed Wall Street, coming in at 120,000 jobs created in the month of March. And again, we saw the futures Friday morning off of that drop dramatically, about 20 points on the S&P, but remember the markets were closed, so it was just the futures that were dropping. The markets themselves did not open until this morning. So again, that was reflected in the gap down on the S&P this morning, and you can see the chart of the SPY here with a beautiful gap down right into this white trend line, which did hold up. You can see by about 10 o'clock we hammered on that line, still held above. We floated up, floated back down, nice double bottom, and then since then volume has just dried up and we've gone sideways to higher. And the volume, again, folks, it's a post-holiday session. Therefore, you have a hangover effect, which again breeds light volume scenarios in the market. There's a lot of people now waiting on earnings announcements from Alcoa Tuesday after the close, Thursday after the close Google, Friday morning JP Morgan, and also Ben Bernanke is going to speak tonight, which also adds a big key into what the market is looking for or hoping for. So again, all these things are keeping people kind of just on the sidelines here or slightly floating up in terms of the buy side. And that's where we sit today. And also, folks, very important to recognize, as the markets have floated up, what do you think the dollar has done? And for those of you that have followed my analysis on the dollar here at InTheMoneyStocks.com, you know that the dollar goes inverse to the markets. So if the markets are floating up, it's because the dollar is floating down. Taking a look at the UUP, which is the dollar ETF, clearly you can see that exact type action. Here's today's action on the dollar, floating lower, and therefore the markets are able to float slightly higher. All right, now again, we still have a nice drop across the board. I mean, let's not take anything away from the fall. Dow is down 102 points, Nasdaq down 28, S&P's down about 13, basically 1%. Dow Jones Industrial Average is leading in terms of smallest loss, while the S&P is down about 1% with the biggest loss. Nasdaq is just underneath the S&P. Now, why is the Dow leading today? Well, the Dow is known for safety. Remember, when you see the Dow lead in terms of percentage gains or have the smallest loss out there, it's generally because people are going into Dow stocks, which are known for paying dividends, which are known as kind of the old school stocks that have been around for a long time. And IBM would be one of those today, which is up 24 cents. So even with the Dow down 100 points, IBM is bucking the trend, up now 28 cents on the day. In addition, you do have some other Dow stocks that are performing pretty well. JP Morgan is just slightly negative, and there's a few other players out there like, let's see here, if I scan through my list, what else is performing? Um, Looks like MasterCard, which is a Dow component, up 83 cents. And again, you can just see how there are certain stocks, kind of the old school name brand players, that are keeping the Dow doing better than the other indexes. Now, of course, Apple is always one we have to look at. While not part of the Dow Jones Industrial Average, it does make up a large portion of the S&P and an even larger portion of the Nasdaq and the Nasdaq 100. And this stock is up $4 on the day. So again, it gapped down about $7-8 and quickly reversed. You're seeing kind of it's interesting. You're seeing Apple become kind of this flight to safety. When everything else is falling out there, people will buy Apple thinking that it's going to be just a long-term play floating up forever. And we are seeing that today, and that's obviously helping the Nasdaq. Nasdaq would be down much, much more if Apple was down on the day instead of up. Same thing with the Qs. Take a look at the Qs today. The Qs just down 36 cents because the Apple makes up 20% of the QQQ. And sure enough, you can see the vertical move, much more vertical than the SPY, which is the S&P 500 tracking ETF. All right, so that's what we have going on today, folks. Again, very, very light volume, although you still have a nice drop on the markets. Going to be very interesting to see where this market closes. A lot of people are anticipating a big buy program to hit the market later today. We've seen it almost every big down day. We're starting around 2:30 p.m. The markets just rip higher and basically close the day flat. So I guess that's the big question in my mind looking at this market. You have a in spirit of bearish pattern development right here from the gap down. There's your in spirit of, but do we negate that by some buy programs? Right now, I'm probably leaning towards 50-50 to slightly no in terms of that big buy program, but most average investors are leaning towards it, which again, we'll see again which one comes to fruition. All right, the other thing I want to mention, folks, was the classic pattern last week, which enabled me to nail this move in the markets and understand every little subsequent move here ever since our beautiful cycle date, which again was right here. And again, notice here how you start to make that rounded top, choppy, which is the end of the move, and then you start to collapse back down. And again, notice the two green trend lines sloping. You have a nice channel there, and every time you hit the high end of the channel, you had a beautiful sell off, and then notice how last week we didn't get the big bounce up. Just like here, we got a big bounce at the end of the week. Here at the end of the week, we got a big bounce. You didn't get that. That was telling you the markets were going to drop. It's called an in spirit of bearish pattern consolidation against this lower trend line of connecting the low pivots. And again, it's all telling you where the market is going in the future. If you read the charts correctly, you can tell exactly where the market's going to go. And sure enough, noticing that, guess what? Tells you downside, down we go. And now we're starting to float here back up a little bit. We want to see again how this market closes today, which will be very telling. I will go over this in the nightly technical analysis video to my members inside the Research Center. The Research Center is geared towards swing traders. It is comprised of videos, swing trade alerts, market guidance, proprietary techniques, daily market reports, everything you could imagine to make sure that you are rocking and rolling in this market and making good money. By the way, one stock alert that I gave out was a short on BAC. I think I gave it out about 2 weeks ago, and the short went off at $10.05. Right up here, folks. This was a master level that I calculated based on proprietary techniques, and sure enough, look at how perfect it was. The stock was strong, but we knew there was a level right here. Today, BAC hit my first target to cover the short, and that was at $8.95. $8.95 from 10.05. That's a $1.10 profit, essentially 11% gain on a $10 stock. And again, that's first target. You put in the money stop now, and you just ride this thing out, possibly all the way down to the 50 moving average this week or next. All right, so just to give you an example of what we're dealing with here inside the Research Center, how the money can be made and will be made. All right, going back to the SPY on an intraday basis. Well, this is now the daily chart. A little bit of a fake print on the daily chart, which is kind of interesting. But nonetheless, look at how close we are to the 50 moving average in this area. This is a lot of support here, folks. Blue line, pink line, and 50 moving average right there. That's at around the 137 to 137 and a quarter area. And while we're well off of that right now, it should be a level we watch in the next couple days to see if we actually touch that. All right, remember, the market is still going to have the buy the dip mentality. It's just going to become weaker and weaker, which means as you fall, you're going to get big bounces, but they'll eventually roll over, in our opinion. And that should enable us to have great day trading opportunities in the intraday stock chat. Intraday stock chat, if you join that, you get live charts from us as you view our screens. You hear me live. You ask questions live. It's a fully interactive forum where we just rock and roll, day trade the markets, analyze the markets. You can ask any questions you want. I will answer them. I'll teach you the methodology to make millions. All right, so again, free trial, 7 days, Research Center for swing traders, intraday stock chat for day traders. Come to inthemoneystocks.com. Become part of the elite. That's what it's all about, folks. You can do it. Anyone can do it. All right, have a great afternoon. I'm going to get back to trading here as profits are or at least there's the ability to make some good profits this afternoon, especially if we start to whipsaw up or down into the end of the day. I'm going to be watching and analyzing where we close, and I'll give you guys my updates in the technical analysis video this evening inside the Research Center. Got to be a member of the Research Center to get it. Take care.